So today we have Pooja with us, and we will be talking about majorly how uh, D2C investors invest in the startups and what exactly they will look for. Right. Pooja is with DSG right now, and Pooja brings rich experience from world of early stage investing, and have worked with some of the most loved consumer brands as well. Right. In investments, she plays a role in identifying and backing promising D2C startups and also guiding them through their early growth and brand building journeys. Right. So today, with the sharp insights, we will get to know that how the startups are getting funding and what's the metrics behind it. Right. So I'll invite Pooja, right, to uh, introduce a bit to Linus about you, and then how about the work thing at DSG, and later on we can take the question answers. Over to you.
Sounds good. Basically, I started with DSG about 7 years ago, and it's been a very fun journey for me. All we do is consumer, honestly. So across food, beverage, health and wellness, beauty and personal care, travel and hospitality, anything that a consumer looks at, we would be more than happy to back as early as possible in that journey. We have two programs now where we look at seed and what we call early growth. And seed happens as early as idea stage. As long as you have clarity on what you're building, we're happy to come in. And we go all the way up to $2 million in check size for that. For early growth, we typically do up to $5 million in check size, but this is for businesses which are what we call post product market fit, but more mature businesses, 30 to 50 crores in revenue size and growing from there, right? So you already know your strategy, but you need to double down and hence you need capital. That's the piece. Both of these are under the same pool of capital for us, and brands that we've backed over time have included Sula Wines, Viba, Epigamia, Farmly, Go Desi, Go Zero. So very indexed on food in a big way, but that's not intentional. It only happens because the team loves the sector so much. Having said that, very long term focused, right? So we're not the kind that will come in and say, "Do saal mein exit chahiye." We'll actually want to stay invested as far as possible. We will look at journeys with brands, and therefore don't just invest once. We also follow on. We set milestones with our portfolio companies and follow on invest in them along their journeys. So think of 7, 8 years at least that we would stay invested with you and want to see what we call the compounding phase. After the crazy initial growth phase, we also value compounding equally
Right.
and therefore stay invested for a longer time. So that's what DSGCP does. Like I said, started with them about 7 years ago, and it's been very rich actually because we do India and Southeast Asia, and we learn a lot from each other as well.
Right.
So I'm based in the Bombay office. We have a Southeast Asia team sitting in Singapore to look at that aspect as well. We're now 92 companies strong, and yeah, hope we find more folks in the Elevate cohort as well. So yeah, thank you so much for having me.
Thanks for the introduction. I wish you will have a century in this year only, and more than that. But yeah, ASAP. Great, great. How's the journey right so far? Like 7 years in D2C, like D2C and DSG, right? It's a long time again working in a single firm, like
Yeah.
so many roles, so many designations, so many companies.
Yes. No, that's true. So I actually started out as an intern, then converted into full time, and have grown here. And I guess I joined 7 years ago and never left. So I call myself very grateful because this is in all practicality my first job, and I had the opportunity to do something very early on. They were very accommodating as well as open minded about letting me do a lot more than what I signed up for originally. So yeah, so very nice bunch of people to work with, and I guess that's how 7 years happens.
Right. That sounds good. Great. So I'll ask all the attendees and participants to put their questions in the Q&A box, right, side by side, so we can take that later on. Okay. So coming back to the topic, right, what D2C investors look for in early stage startups. right? Also, I want to deep down on the DSG portfolio, right? For some of the companies you have invested in a bit early, right? And then for some of the companies you have invested in at very, very later stage also. So how do you differentiate on that manner? Like when you are picking the early stage companies, what exactly you will look for? And when you are looking for the growth stage company, what exactly you will look for? Right. Initially, we can begin the conversation with this area.
Oh, sounds good. So, we've seen a bunch of brands along the way, but I think every time we go back to that question, we think it's a function of defensibilities. Is it okay if I share my screen actually?
Yeah, yeah, yeah,
I just sent a request.
yeah. It's done.
So, okay, amazing. Here we are. Can you guys see my screen?
I can see that. Yeah, I
Okay,
can.
great.
Yeah,
This is essentially how we define defensibilities. This is a question all investors will ask you somewhere along the way, right? But product, brand, distribution, supply chain, these are the four big things that we look at. Your product, how unique is it or how good is it, quote unquote? This is actually a starting point. A lot of people think this is the defensibility, but unless you are, for example, a SkinCeuticals or an Olaplex with a patent on it, your product will be copied. And honestly, if you're doing a good job, it will be copied. So you might as well hope that it is copied, right? You know you're on the right track when that happens. So product is a huge defensibility in your very early phase. So the 0 to 1 crore type journey, product matters a lot. Don't get me wrong, product will matter throughout your life, but it can't be the only thing that stands out. A lot of other things will have to add up for that. The second aspect of that is how strong is my brand recall, right? Which is a function of two things actually. If you shop on Amazon, you will see people search for ghee, for example, A2 ghee. That's how they'll search. They might search, if you're lucky, A2 Bilona ghee, and find a brand based on the narrative that they see. That's what we call a flywheel. The second way of doing this, which is ideal for your brand, is if somebody is searching for you. So if they're searching Anveshan, for example, then that's like as good as it gets, right? Because your consumer knows who you are. They've seen your ad, they remember you, they associate you with A2 cow ghee, Bilona ghee, and what more than that do you want? Because your consumer knows what to look for. So, if your recall value is landing, if there's a hook in your meta ad, in your communication strategy, in your listing sometimes, then you get brand searches, whether it's on a platform or on Google, and that's the second part of it. The third part of it is distribution, which everybody knows in India is super, super critical. Do I have channels with defensibilities right now? For those of you who follow Arindam Paul, I think he had done a very good post on this where he said, look at channels which have flywheels. If you want to compound, your channels also need to be compounding. You can't be doing this on a channel which nobody else can see, right? Like your website is not a compounding channel. Your website is an organic channel for your consumers to come, see, visit the brand, experience the brand, and then go to another platform. And over time, that's really what happens to brands which are only on their website or only in their own stores, right? There is no external calling there. But multi-brand outlets, so your GT, MT, quick commerce, Amazon, Flipkart, all of these are channels where you can actually build distribution defensibilities because the channel is so huge. You are one brand on that channel, right? You are not spending money to grow the channel. The channel is doing that. So the distribution piece is also critical, and we've seen that stand out in a big way in brands like Go Zero, which have been quick commerce first. So when nobody believed in 10-minute delivery, they stood up and said, no, this is going to be the next big thing. We are in a category with impulse, which is better for you, which is search led, which is also browse led sometimes. And we want to be there because if somebody wants to buy ice cream at 12 o'clock at night, but single scoop because they had a bad breakup, then where are they going to go? They're not going to go to a parlor. They're going to go to Blinkit and they're going to order there. Or they're going to go to Zepto and order there, right? So those are the customers that you're going after today. They want everything yesterday. They don't know what they want, but they want it yesterday. So your distribution needs to be intact for that. And we call it product channel fit now. So is your product suited for a channel which is fast growing? And therefore, are you able to deliver consistent growth? That is distribution to us. And the last piece, which is the hidden piece, which nobody really talks about, is how much of your supply chain is really yours, right? Versus somebody else's that you're buying. Because there is this constant debate of how much of trading happens for D2C brands. If you look at personal care, there are five brands which go to the same contract manufacturer, and they don't have their own formulations. The CM is giving the same formulation to five different people. Just because your marketing strategy is stronger than somebody else's, or your channel presence is better than somebody else's, your revenue might be 10x of that person. It's very possible to be in that place. So owning your supply chain, owning your distribution, owning your formulations, very, very critical aspects as you scale. On day one, you may not have distribution, but on day one, you will have supply chain and product. And over a period of time, it can keep getting better. So incremental improvements can keep happening. So these are the four defensibilities effectively that we look at. And the long answer to your short question is, when we look at early stage brands, we look at, is the market size compelling? Size meaning what we think will be potential size, not today's size. And is the opportunity almost intuitive? Do we know people in our networks, or do we understand who the consumer is? And therefore, is the founder built to do that? But the major bet is on the founder. And that's how early stage investments happen. We typically have an underwriting for how much of a multiple we'd want to see over 7, 8 years, and so on. Each fund has their own, tailored to their fund size and who they've raised capital from. And for early growth businesses, the criteria obviously becomes a lot more stricter, because this is no longer a paper plan. ना आपने 3 साल पहले कुछ बोला होगा and you would have delivered on that, and therefore it matters what your team also looks like. Is everybody living and breathing the same mission statement? Do you have a clear objective? Are you on track? Are you growing month on month? Those things matter. So it's a lot more data at early growth. But at the end of the day, honestly, it's still the founder. Because if the founder is not in this for the next 10 years, then we can definitely this for the next 10 years, right? So that is a hindrance for us. So we want to see founders who are unbelievably committed, but are also okay with taking time to grow, because consumer needs time. It won't happen overnight. So just because you throw money at something doesn't mean your brand will be a 100 crore brand in 5 months. Nahi hota. It's like having a child. It takes 9 months. There is no shortcut for it. So we genuinely do believe brands take time to build, and investment decisions are almost like marriages, right? You will sign up an investor who you can't get rid of for 7, 8 years. They will sign you up. They can't get rid of you for 7, 8 years. It's mutual. So you need to. It's almost a contract which is tenured, but you better like each other along the way. So I think those are the two pieces for us.
Right. I agree on this. Like a bit of experience, but yeah, I'm also creating startups. So we say generally that for founders, for like finding good founders or co-founders and finding right investment partner is like a marriage only, right? If it goes good, then it will go good. Otherwise, it will take the business also down. Right, that things also happen. Yeah, and there are some scenarios or synergies in which the founder, like if there are two or three founders, one is full time, right, and other the two are like bread and butter of the family, right? This scenario arises a couple of times in majorly in the early stage company. So how will you like take that kind of a bet, or that's a red flag for you completely?
What part is a red flag for me exactly?
The founders availability for a full time, they are putting their like sweat and tears also in the business, uh,
Hmm.
right?
Okay, so I think here's the deal, right? So if you're not doing this full time, then you're not a founder. Then you're running a business, which is okay. Then you run a business, don't raise capital in it. Because if you're not full time, our belief is that we may not be aligned with you,
Yeah.
because we are unfortunately full time doing what we're doing, right? So it's not aligned. Honestly, we would not do something like that.
Got it, got it.
Yeah.
Great. So, and also, right, many of the early stage founders or first time founders don't know the investment journey, how it looked like, right? Typically, in the first introduction, they will say, yeah, पैसा कितना टाइम में मिल जाएगा, राइट?
Correct.
Right. So can you deep dive or give a little bit of glimpse how the journey of investment sounds like? That there are intro calls, there are investment calls, then the
Yeah.
legal, right? Yeah, a bit on that.
Okay. So, firstly, I'm not taking away from the fact that it's painful. It
True.
is painful for founders. The sad part of it and why misalignment is really caused in this is what is a founder's full time job? Their job is to run their business. What is an investor's full time job? It is to actually look at businesses, diligence them, make investments, and then grow and nurture them, right? And then eventually exit. So, if our full time jobs are not aligned, if one is a financier or a partner and the other person is really a builder, you will have to look at each other differently to appreciate how a process works. Now, what do I mean by that? If you are a snacking company and you come to somebody like us, we have a point of view because we've seen snacking for the last 13 years. We've seen how it's evolved. There is a very good chance we have seen snacking for longer than you have been thinking about snacking as a founder. Doesn't mean our opinion is right. Doesn't mean that you should even listen to us necessarily. It just means that there is a point of view. Now, if you come to us with an investment proposition in footwear, significantly different, right? Because we don't have so many footwear investments. We've not seen as many journeys. Um, and therefore, we will take time because we want to first understand what that means. What can we do here? What will our value add be? And therefore, what does a founder need from us to grow? I think those things are important. Now, that decides how a process works typically, and there will be averages for all funds and then there will be edge cases for all funds. So if you come to us with something in packaged food, there's a very good chance you hear from us in the next week or so, right? We fast track that much. I have seen those cases, I've been on those cases. um, and each fund will have their own course where they've done this because of their history more than anything else. As you look at what a process means for a typical fund, it would mean an initial conversation. A lot of people come without decks, they come unprepared, they come saying, I know everything about my business, and therefore I will tell you on call. And that is okay because maybe you do. And there are some funds who don't respect that. I can tell you, we don't necessarily care about a deck. It's okay. If you don't have a deck, that's fine. At the stage that we invest, we want to know what you're building. And sometimes you're building so fast that a deck cannot communicate that. What we do think though, and this is for all founders to honestly appreciate, is when you put pen to paper, right? It streamlines your thought process. You should make a deck for yourself, whether you make it for someone else or not. We do this with our investors all the time, right? What do we stand for? Why are we doing something? Why should we have to send a deck? We'll just send a link to our website and do the same thing, right? But we are telling a separate story from someone else. So if you are a brand which makes namkeens, and let's say you make save, okay, save is common, 1000 लोग बनाते हैं, why are you different? अगर deck नहीं बनाया, I don't know why you're different. I will go to your website and see save बेचते हैं, ठीक है, it's a good space. That's the difference in narrative. So as much as you can control your narrative with investors, you should, because your story will not come out on its own otherwise. Either that or your consumers need to be raving about your product, which will not happen, right? At a very early stage, it won't happen. Having said that, now what does the actual process steps look like? The first is where you have a conversation with somebody on the investment team. There is a very good chance that person is not a partner or a director or a principal or whatever you want to call them, right? Because that's how processes work. So just as in your companies, there is somebody in the founder's office to do something and then comes the founder. There is also treat these people equivalent to what founder's office looks like before you reach a decision maker. That's how a process is. You should respect it as much as you can because many people underestimate what the value of an analyst in an investment fund is. You would be surprised. They are your consumers in most
Right.
cases.
Right.
So if they don't want to buy into the idea, there's a good chance that the managing partner who is maybe in their 50s, 60s will
Mhm.
not relate to that concept.
Mhm.
Sometimes you will just miss a file saying, okay, if you don't think this is cool, let's not do it. So,
Right.
um, so that happens. So treat your first call with as much importance as you can. The second conversation is with somebody mid to senior level, depending on what. And honestly, in each conversation, we've seen the best founders bring their products show up with brand merch, they're talking their brand and they look their brand, right? They also ask for meetings in their offices, where you can see what the culture is at that workplace, where you can actually go and sit down with the team and have conversations with them. However, junior, but they signed up on that journey with you on day one. That matters a lot. And then there's the sort of painful part on data, right? People will ask you things on what is your MIS like, what are your projections like, and so on and so forth. Please don't fundraise without that. If you don't have that, then सामने वाला तो वही मांगेगा ना if they are a financier. So that is the least you can have in place. Most people don't have. They'll come back and say, I need time for my data room, I need 2 weeks, 3 weeks. So then that gives you a sense of you're asking me for 10 crores, but you have no idea where that 10 crores is going to go. So I can't have this conversation till you also know, no, because it's your business. So that's the third part, which is actually a major part. And then moving from there, once there is comfort on data, and mind you, there will be a lot of data because there isn't results. So people will want to run their own surveys, their own customer dipsticks, whatever you want to call it. They might want to speak to your consumers, which is something that we do, by the way. We talk to consumers a lot to just understand क्यों खरीदा, क्या दिखा उनको, and फिर से क्यों नहीं खरीदा if you bought the first time. That's a huge risk in businesses because if consumers are not repeating, then you're not delivering. So that's a problem. And most of the time, you would be surprised. We hear things like, "Nee, it was good, but then we saw something else and we bought that." तो निकल गया दिमाग से. It's not like आप खराब हो. So that is a tricky part because that means your message is really not landing. Somebody else's is landing better. Somebody else is top of mind effectively. So that's the problem. And over time in this process, as the VCs do their diligence, and this is something that we also ask of founders, is please give us feedback and also listen to our feedback in the process. So a lot of people come back saying, "आप बहुत data मांग रहे हो." And मांगेंगे यार because this is the only investment we want to make in this space, no. So we're also blocking things because of this. And therefore, what it makes sense to do is if you say, Pooja, you know, I make save. Now, what have you learned about my category or what I'm doing? I should be at the end of the process able to tell you कि ये दो तीन चीज कर दी ना तो आप डबल हो जाओगे. I should know that because if I don't know that, then I can't give you the money, right? I need to know your roadmap. It's a question that many founders don't ask. Many founders think हम खुद ही कर लेंगे, but then आप equity क्यों दे रहे हो? आप debt ले लेते हैं.
Hmm.
So you should ask your partners for as much as possible. Some of our best founders squeeze us on time. Like reach out, ask for things, make us do things. It's okay. We're here for that. So that is the part in the process that's the most painful. After which there is an IC conversation, which is the toughest part for us, right, as VCs, because you can have 20 opportunities. Why is this particular investment opportunity the best one in that? You will have to stand and fight for that, and then you get committee approval. Now each VC has a different process of what it takes to go to IC. Some people will say we have two partners, दोनों से बात करो. Some will say कि come and present to our IC. Some will say कि throughout the IC process, each time there will be a person involved in that process who is looking at a particular division. So some folks will have a tech person, some folks will have an ops person, and so on and so forth. So you'll have to go through that. It's a little bit tailored, but net 4-5 राउंड होते हैं एंड इट टेक्स इट्स टाइम बिकॉज 7 साल की जर्नी है ना तो 4-5 राउंड होते हैं. सो दैट्स द टेक अवे.
Got it. Extreme, like it is the most, I would say, nervous part when we are raising the rounds. Yeah, I've been a founder myself, but unfortunately, in a round nahi raise hua, but the journey I have taken here. So, great thing. And also, like you said, early stage mein, and mostly the founders, when they are experienced, right, they don't want to talk to the analyst. They'll say, "Yeah, I carry experience of 15, 20 years, so I will talk directly to the partner और अ सीनियर लेवल मैनेजमेंट गाय जो मेरी बात समझे, राइट, एनालिस्ट को पता नहीं है, लाइक उसे उतना मार्केट नॉलेज नहीं है." सो कपल ऑफ, लाइक इन माय अर्ली डेज आल्सो आई रिमेंबर 2-3 सिनेरियोज जो हुए थे, राइट. सो ऑन दैट एक्सपेक्ट आई आल्सो सी के फाउंडर्स को भी वो चीज समझनी चाहिए कि ईच एंड एवरी एक्सपेक्ट एंड पॉइंट जो हमने स्टेजेस बनाई हैं दैट प्लेज वेरी इंपॉर्टेंट रोल, पूरी इन्वेस्टमेंट जर्नी में.
Yeah, it does.
Yeah, yeah, great. Uh, okay, sure, sure, Gautam. I'll speak louder. Sorry. Great. Okay. So again, so we have gathered couple of questions also, right? When we are registering the all the attendees part. Uh, Firstly, Gautam also have asked that what are the problems that arise while the founder is raising funds, right? Both on both the sides, as well as the founder and also with the investor. If you can deep down on that
What are the problems?
problems, yeah,
Um, what do you mean by your question?
yeah.
Because you can
So
have many problems.
many legal product and everything, like generalized problems, probably.
Your so your question is basically you're saying what is a problem that a founder can have with an investor?
That can also be a problem. You can say on that part as well. Yeah.
See, problems both हो सकते हैं in the sense that look, there is an SHA that you signed up for, right? That SHA is going to have many clauses. Now, if you go and, for example, there is this provision called protective provisions or reserve matters, which means your investors need to say yes for you to be able to do something because they want to make sure the money is being utilized properly. So if you go and take a loan, for example, of 15 crores, you're sitting on cash of 5 crores without asking the investor. It's a violation of your SHA. So theoretically, can they take you to court? Yes, they can. Uh, Practically, will they look honestly? Will they? Because unless आप fraud वॉड करने की कोशिश कर रहे हो, I don't think anybody will come and go after you like that. But they want to make sure that your interest and the business interest is aligned and that they are not being lied to. See, a lot of investors will understand, and a lot of founders don't understand this. Is investors might panic when your growth story is going for a toss. For example, sales tanked by 20%. Things like these can happen. But if you don't tell your investors and you're not upfront or forthcoming with that information, it leads to loss of trust, like it will in any relationship. Do not let that happen. I think that is the cause for any kind of problem. Otherwise, investors are not here to come after you here. There are so many portfolio companies and so much work to do that this will not happen. Matlab, in general, now if you find nasty individuals, then you find nasty individuals, but you
Right.
shouldn't be raising money from them then.
Right.
So hopefully. So yeah,
I get that. So communication is the like main point.
communication is key.
Basically,
So
whatever bad
like
or good is
as much
happening,
as
the investor should know.
correct.
Great, great. Okay, next question asked by Amar. He is asking that what are the clear directions which you will give on fundraising if a founder is doing for a MVP stage D2C FMCG brand?
Which sector?
Uh, D2C FMCG they have like he have quoted only, not like
Understood.
specifically. Yeah.
This is tough because if I let me make an assumption. Let me make an assumption that you are in food and beverage because I don't think most other things are D2C FMCG. But if I just assume you are in food and beverage, then I would try and have a go-to-market strategy on quick commerce as much as possible. And in the quick commerce channel, in our experience, if you raise, let's say, a 5-6 crore round at least, then that itself can take you to over a crore a month in revenue. That should be your ideal starting point if you can do that.
Got it.
Yeah.
Okay, thanks. Prakash is one of the attendees. He is asking how to understand the investor's mindset, right? That he or she will invest in the business or not.
Ideal mindset of the investor मतलब
Yeah,
वैसे investments mood पे नहीं होते.
right.
तो
On the thesis, but yeah, on the thesis part, I would say. So how
yeah,
you
so I
can
think
see that?
that's fair. See, look at what the investor has put money in before because you understand whether they are playing safe, what their risk appetite is, are they super contrarian? There are all types, right? We come in all kinds. So therefore, look at what people have invested in before. Also look at what we have not invested in before and ask those questions. For example, us like at DSGCP, fashion is not something that we honestly love internally. It takes a lot to be able to deliver in that segment. And unless you have very, very real supply chain background, it's very hard to crack. at scale. So it's something that we've stayed away from. In our rightly or wrongly, we've stayed away from it. But that's an investor specific thing, right? There are so many of our contemporaries are actually investing in the space and have made very good returns. So it doesn't mean fashion में invest नहीं कर सकते आप. It just means we have a preference for something else. So if you come, for example, pitching a fashion footwear brand that sort of changes its collection every 2 months, then you are not for us, right?
Right.
So it's that sort of thing. So like we do research on you, you should do research on us, and a lot of our information is actually public. So most of us announce our sort of website logos of brands, all of that. You will know at least where we've invested, if not how much we put in there. So yeah.
Got it. Got it. Okay. Next, asked by Nitya, she's asking why is the bar for consumer tech in a D2C is so high, right? And in comparison to B2B tech startups,
Can you, sorry, say that again?
why is the bar for consumer tech D2C startups is like so high for the investments? I mean, the frequency is very high if we are comparing it with the B2B tech startups, basically.
Hmm.
The D2C are getting funded very, you can say, in not an easy, but in a frequent manner as compared to the B2B tech startups.
Sure. So, I mean, there is potential, right, to build in the space, and that's really what we're trying to understand better. Basically, if you just look at India consumer story, everybody is going after it. Everybody will show you the same GDP chart and say India is where China was, is where US was at one point in time, and each sector will grow in a certain way within that. Anybody who's trying to be an enabler of that, across whether it's categories like fragrances, like healthier snacks, and so on and so forth, obvious, right? Because you will see your consumption patterns changing only. So you know कि आपके लिए कोई कुछ बना नहीं रहा है, but you want something. And that's why it's really happening. That's why there's a gold rush. Having said that, the bar is going really high. So in 2017, what would get funded versus in 2025, what would get funded is really different. But yeah.
Oh, got it. Got it. Like similar context on the like next steps, Ravinder has asked, what are the basic fundamentals of D2C space for any early stage founder that he can accomplish? An investor, like what exactly the investor will look for in an early stage founder or in early stage startup? The eligibility criteria, you can say.
Okay. I think for us, it comes down to a category and what the founder fit in that category is. It doesn't mean that you need to have had a startup in the same space. It doesn't need to mean you are a second time founder and so on and so forth. But founder market fit helps. You could be someone, for example, we met folks earlier this week who had a family connection through distant family and something that they had been doing throughout their whole life, but worked at a bank and then went and did that now. So there is a connection. You understand the space, at least intuitively, you know what works and doesn't work, and that gives you an edge. Having done a job or a stint in that space helps. Having spent 6 months to understand it helps. But when you're building from scratch, if you don't have a co founder or a core team member who understands it, then that kind of makes it incomplete. Because in today's day and age, marketing is almost as important, if not more important than just your idea, right? Execution will deliver. So we need somebody who can ideate and somebody who can execute. Very few times it is the same person. So I think solve for that. Solve for people as early as you can in your journey, and know what you don't know. Know what you don't know and know what you don't like. What you don't know, you should solve for very early on. What you don't like, you should solve for later on. But basically, your team needs to be doing that. Na? Otherwise, you will end up doing everything in that quadrant, which makes no sense. So I think it's really that. It's founders who know what they don't know what they know, and can double down on their strengths very early on.
Got it. Got it. Well, thanks for the answer. I thought it's great and solve the problem basically. What would be the key points for a early stage founder, basically. Right. Coming to the next one, Ridhima have asked directly, do you invest in footwear and at what stage typically?
I answered your question, I think.
हाँ,
Um,
definitely
so
answered.
if it's fashion forward, I will caveat. If it's fashion forward, then no, it's not something that's of deep interest to us. And then stage doesn't matter. So
But why is it so? There are so much fast fashion brands coming up, right?
that's why.
Okay.
Because yeah, when we underwrite exits at the end of 7 years, if we want to sell,
Yeah.
who will we sell this to? Who is dying to acquire a footwear brand? I don't know. That's
Hmm.
why. And also, how many people will make it for 7 years? I don't know. There's no tailwind, no, pushing this. So that's why. That's the problem.
But again, brands like Comet or Gully Labs are coming up and they are getting a good response from the community and
Yes,
the millennials and Gen Zs as well.
correct.
So don't you see a good opportunity? Like,
See, there is, but if I have to be honest with you, if I tell you that I get whatever 15 pitches in food and bev where I know that I can predict what outcomes can look like
hmm,
with a higher degree of probability, then as a more responsible mind, I will go after that. It's not that you can't build outcomes in these. Of course, you can. The ratio is just really bad. That's all. So,
and like one question from my side also, right? If you have invested in an ice cream brand, for example, Go Zero, right? And then let's say a Hoka also comes up. So,
yeah.
like, fortunately, I wish for. But would you invest in the same category and the same like domain?
Okay. It's a question that has been asked before actually.
Yeah.
So if you look at the same category, then the answer would be yes if the audience positioning was different.
Okay.
So if I knew, for example, and let me switch the brands a little bit for me to answer this question, right? So you must have seen a brand like Milky Mist, which was
Yeah.
actually originally supposed to be milk oriented and then went after an ice cream and so on and so forth, right? Um, if that kind of a brand has to now modernize and sort of launch on quick commerce and so on and so forth, which it's doing, and you have somebody like a Gozero and you have somebody like a Hoko,
Hmm.
technically, and I'm not saying we would invest, but I'm just saying in theory we can invest in all three because they're not catering to the same consumer. A
Right.
Go Zero consumer will very unlikely will buy Milky Mist.
Oh my God.
And a Milky Mist will similarly unlikely buy a Hoko and so on and so forth. So if there's no overlap in proposition or in consumer, then we're okay.
Hmm,
That's how we would do this. But we will not. So what happens along the process, which is right and wrong, is we will have access to data on ice creams across all. Doesn't mean that we can exchange that data with other people.
yeah.
So yeah.
Right. Got it. Got it. Great. Thanks for answering my question. Basically, that's my doubt. Great. So, secondly, Shishta have asked, what's a good number for PMF for a zero repeat purchase product in a consumer lifestyle sector priced at 3,000 rupees? For example, a fan, a
Hmm.
ceiling. So, how
Okay.
can we see a PMF here?
How can you see PMF? Okay, interesting. So in zero repeat products, right, look at referrals. Because repeats don't come only from the same person buying again. Repeats also come from the same person telling everybody in their neighborhood ki ye best hai. That needs to be something you need to develop very early on. So we don't have, I won't call this zero repeat. It's really not, but it's a um, high AOV category where people may not come back as often. So think of luggage, think of mattresses, think of cookware. We are in all of them, right? Um, यहाँ पे if the consumer is not going around and telling people this is the brand to buy. This is what really helps me sleep well at night. Or, oh, you're moving into a new house, you must consider this brand. Those kind of things. Organically, if consumers are not pushing your brand, right, your first set of consumers, you don't have PMF. And you will know कि referral कहाँ से आया if you track it. But you need to track it. You can't be like, I have no idea where this consumer came from. Lots of businesses make the mistake of not investing in data very early on. This is something you need to track.
Right. And for early stage founders, it's always asked by the investors to call every consumer or every customer to gain the feedbacks and where the leftover is. The abandoned carts is a good example to gain the customer feedback. Yeah, that can be done.
Correct.
Yeah.
And the other piece to do actually is if you're selling on Amazon, for example, what I was saying earlier, right? So if they're searching for fan, and let's say you are brand ABC, if ABC comes out on top, are they clicking on ABC or are they going down?
Hmm.
That's one thing. The second thing is, are they searching ABC fans? Because the number of searches for ABC fans, if month on month are going up and you're getting results from there, then you know na ki PMF hai.
Hmm.
So that also.
The search into the conversion ratio kind of a thing.
Correct.
Got it. Got it. Okay. Coming to next, Ashwin have asked how to take a ideation to the next level. We have a capital. Sorry, we have an idea, but we don't have a capital to develop as MVP or at least a prototype. What will they do? Like,
Interesting. No, I mean, if you don't have capital, you have to look at places like grants. So, a lot of educational institutes will give you grants for the first couple of lakhs. How much capital do you need is the question. Some people will fund things pre prototype also. There are angel investors, there are also people in these educational institutes who can sponsor your research. So, you should be looking at that as an option.
one anonymous guy have asked, what will be the future growth of the healthy snack business, like healthy millet or namkeen businesses under rupees 30 40 a pack?
At rupees 30 40 a pack.
Yeah.
See, 30 40 bucks is
And
very
healthy.
lucrative. Having said that, depending on what your grammage is, sorry, but having said that, I would be very careful about what do you mean by growth here. Because if you're growing in the offline channel, laws of gravity will prevail. You will only be able to do so many outlets with so many distributors and so on and so forth. If you play that same game on quick commerce, life is very different because quick commerce itself is more than doubling year on year. So imagine the pace of growth in your category. Now, if you come and say I'm healthy, which is I'm palm oil free or whatever, then your growth rate can be higher than that as well. Uh, so honestly, you could grow at anywhere between 40% year on year to 200% year on year, depending on what is it that you're really making. Price point is lucrative if you're offering the same grammage as at 30 bucks or 40 bucks, for example. If you are 3x, let's say the price give or take of Haldiram's, who is the incumbent player who is not healthy for all practical purposes. That's what happens. But if you are making the not the same product. So let's say you're not making a save or a chakri and so on and so forth. Then you're making a jawar puffs, for example, which is a little bit more exotic now. Then obviously that market size does not apply to you, right? Your growth rate will be slower because your form factor is new.
Hmm.
You are introducing that to the market, and maybe four or five other people are also kind of playing there. Differentiation is limited beyond a point. So you need to be able to focus on fill rates. Availability and fill rates is what will get you scale eventually.
Got it. Got it.
Yeah.
And like one more like carry forward question to this, and when we are addressing to a product or maybe in healthy snacking or something which is coming up as very early or very innovative, right? जिसका अभी TAM decided ही नहीं है, right? Or if it's very a small bunch of community or very small geographical area जहाँ पर अभी test out हुआ है, right? How you will see that business and define whether it will scale or not.
See, if you're testing, I will want to see what that means, right? Again, am I getting repeat in that area or am I getting referral depending on what category this is? I think those two things matter a lot. Over a period of time, is your cost of acquiring a consumer coming down or
Hmm.
is it staying the same as you scale? I think those things will matter. If your cost is increasing as your scale is increasing, I would be worried because that means आप ceiling hit कर रहे हो.
Hmm. Hmm. Got it. Got it. Okay, thanks for this. Shishta have asked, what kind of data room can an idea stage company have if we are presenting in front of the investors?
What kind of data room? See, here is where a deck will help, right? A deck will help if you have some sort of a prototype तो गलत है, but if you have a sample, then that will also sort of boost your chances of actually doing well in a meeting. So if you come to me saying I want to build in fragrances, having no background in fragrances, I would say this is great, but I need a sample because otherwise I don't know whether this is going to work or not. So yeah, so I think that needs to be there, and honestly, you will be able to work with manufacturers with 2, 3, 4 bottles samplers मिल जाएंगे.
Got it. Got it. Reddy have asked directly that they have a MVP in the category of functional beverages, but they have not incorporated the company. Do they qualify for your seed program or not?
See, we will not be able to invest without a company, obviously. So, so to get a meeting, that's perfectly fine. We can meet. To make an investment, no, that will be a condition precedent or what we call a CP to the investment. Because where will we invest if you don't have a company?
Got it. Then, okay. Tina is asking, what are the other ways of raising funds for bootstrapped solopreneur business instead of the investor, like very difficult route?
I depends. If you're not loss making, then go get debt, right? Banks will be very happy to fund you. So I would go down that route. Some people have now come out with revenue based financing also, where you just have to give access to your bank statements and payment gateway and your last MIS, and then you will get access to that as well. I hope I answered your question.
Yeah, yeah. Okay. Uh, then one anonymous have asked, what is the usual equity percent VC expect from early stage companies, basically?
Honestly, each VC has their own number. A lot of people say 20% if you want to work with averages. Um, for us, that's not hard and fast. It depends on what category we're investing in and so on and so forth. But we are not ownership obsessed. We don't do our math based on that.
Got it. And one have asked how much you would usually invest in an early stage company, the investment amount, basically.
How much would we invest? It's up, starting with 3 crores all the way up to, depending on what your stage of early is. If you're actually launched, have revenue, and so on and so forth, then up to 2 million, so 15, 16 crores.
Again, Anveshika have asked in food FMCG business, what like where there might be any like IP won't be there, but a competitive market is there that anybody can do. So, what would be the differentiating factors for a business or for a founder that you can look up while investing?
Differentiating factors for a founder while investing. See, there is no IP in most things in consumer, and that's okay. But capabilities need to be there to be able to do things faster and better than others. So the biggest quality which is underrated is honestly what we call high agency. So getting things done, and then also hustle, which is essentially just on the treadmill, right? Continuously trying to innovate. Very few people try to do that. They sleep on it. So they will wait for someone else to do it and then copy. And that doesn't make you a brand, that makes you a copy. So that's the, yeah.
And Rohit is asking that for mass beverage segment, right? And for other products as well. Right now, we are seeing that founders are moving out or stepping or halting their processes on marketplaces and moving and shifting to quick commerce, right?
Yeah.
And the data or the traction, and we are not getting any thesis for the quick commerce thing, right? As an investor or a founder, we are just getting the revenues, and that's a hockey-like streak. Growth is there, but again, something concrete is not. yet, which we have found out. So, how as an investor can see that it's a trusted model and a scalable also, or it's a just bubble that can be burst out and again the journey will continue for the startup.
Okay. Let me answer this because there's many questions packed in this.
Yeah.
Honestly, we think quick commerce is here to stay. In what form and shape, we will only learn because it's evolving very fast. Will commissions be standard? No, they are likely to go up. Will cost of marketing be standard? No, it's likely to go up. Will it replace offline? No. It will complement it over a period of time. So, in our view, actually, we think this is here to stay, but what you see today is not how it will look 5 years later. So, that is one. Having said that, the second piece to it is, can you build a brand on quick commerce? We think yes. It will operate exactly like what I said about Amazon. The same flywheel will kick in. But you need to remember that quick commerce will become harder because if you don't sell, Amazon doesn't delist you. Quick commerce will throw you out because there is no space in the dark store. So that is something to be very, very cognizant of. And I would treat it as a primary channel for sure, but it cannot be my only channel. I
Got it.
also need to learn how my consumers shop elsewhere. I cannot only be on one channel. That's the, yeah.
Got it. Got it. And then Niban is asking what should be the initial budget for the marketing of a D2C niche category for
Hmm.
the fashion brand. And marketing, she's referring like all platforms, social media, performance, meta, and everything.
Tough. Niche means what? So if you tell me niche apparel, then niche apparel is expensive to build online. It's not cheap. And growth nahi aayegi. So it also depends on how you want to grow. I don't think there is a very straightforward answer to this, but if I just look at anything niche that you are trying to build out on your own, you need at least 4 5 crores to get to 10 crores in any segment. Very few segments will deliver less than that. And a large part of it will go towards marketing.
Got it. Okay. And one have asked, would you be interested in devotion commerce, considering it's a very high time right now?
Uh, See, straight answer would for this country obviously always be yes. That being said, some people have done it and it's not worked out. People don't make money. They make revenue, EBITDA nahi aata over a period of time. So if you make a video commerce app, if you make these, we will sort of help you get collectibles and so on and so forth. Those things, astrology, depending on what you're doing. But if you're trying to build an app which only does video content, which is honestly now AI led, there is limited differentiation. So you have to be more than that because दो तीन लोग already कर रहे हैं and they're very well funded. So you better have a right to win if you're trying to get into that space.
Oh,
Consumers won't have 4 5 apps. They will only have one, two maybe at most.
got it. And one have asked, like, would you be open to invest in marketplaces?
Yeah, we have invested in marketplaces.
Mm, Great. I think we have taken most of the investment related questions. Again, Sahil have asked protein chips, biscuits, and chocolates. Would you be interested in seed funding? And what stage or what idea and what sales would you look for?
We can invest at an MVP stage in this category. It's a very high priority category for us. We would really want to see differentiation. Everybody says protein, protein, but if your label looks bad and you have a ton of sugar in this, um, then no, right? But we would want to see what it means when you say there's protein chips, biscuits, and chocolates. What is the grammage? What is your label like? Where are you selling today? Is your taste, honestly, in food, taste is everything. India will look at taste first and then the label. Nobody cares about the label if the taste is like crap. So So that. But short answer, if your product is good, seed stage, like as early as we can.
Got it. Got it. Okay. And one thing, one of the attendees have asked, Joy have asked, how AI will help, right, and how the D2C brands use AI, or D2C AI brands will look when it comes to investing.
Good question. We are working through that. I don't have a straight answer for you today. I do know that it's evolving at a pace which is like unimaginable. And honestly, we internally prioritize AI so much, it's not even funny. We are almost mandated to, before we present anything internally, run it past our custom GPT. So,
Yeah.
um, obviously, we don't rely on it today. It's still learning, but that's something that we are focused on. Having said that, what will these look like for D2C brands? See, I don't know about how AI will look for D2C brands because there will be different things that AI will do. So, straight from your own workflows as a founder all the way up to what you end up doing over a period of time, right? That can be reviews and ratings कैसे कल आउट करने हैं, प्राइस बेंचमार्किंग कैसे करना है, competitors क्या कर रहे हैं, outside India क्या हुआ है. You can do AI, you can use AI for all of that. You can also use AI in finance. So reconciliations with your marketplace vendors and so on and so forth. You can use AI in a big way. But at the bottom or at the crux of it, one of the big areas that we think AI will impact is actually SEO. And because we know so many Gen Zs, as soon as they start work, they're using GPT, right? Which is a very different life compared to what we led.
Yeah.
And for us, Google might still be the port of call, but now Gemini has started answering questions, right? Google is not answering them anymore. And otherwise, you go to GPT straight, which means you're searching on GPT. And Gemini is still SEO friendly compared to where everybody else is. But
Yeah.
if I go to a Perplexity or a Chat GPT or a Claude,
Yeah.
then God help you if you don't feature if I say which is the best serum if I have acne, then to get rid of this in 14 days because it's going to give me five suggestions.
Yeah.
So we think SEO is being the rules of SEO will be rewritten very soon. That is a place that needs work.
Got it. Got it. And also, the information there is true or not, right? It's picking up the articles and the source is not there many of the times. That is not guaranteed that it's a true information. I also
Correct.
feel so. Right. Got it. Thank you for answering like mostly the questions we have covered. Right. So last few thoughts, if you can share with everyone. Okay. One have asked, just I have asked, we can take this. Can you please consider? Okay. What's the consideration for TAM for consumer businesses given any D2C sector companies flag up and plateau of around 100 crores? Okay. So that's a very scientific thing.
That is, see, people can plateau at 7,500 crores. It's
Mhm.
possible. We've seen that happen. You can plateau at most stages, honestly, but many brands plateau at 100 because they're not able to cater to the next line of consumers. And repeats nahi hote. So if you're playing a penetration game, you will cap out at 100. It's very possible.
Okay.
And to beat that, you need to start. That's what I'm saying. Innovate early on. So yeah.
Got it. Got it. Thanks again for answering. Like, I mean, there are many, many questions, but which will come upon, right? I will ask my attendees to please attend the Elevate sessions also. Pooja is a like frequent speaker over there, and she will help in guiding you for raising the funds in your startup journey. And great, Pooja. Last thoughts, if you can share one, two liners, what exactly a founder should do when he is looking for funds. Uh, yeah.
I think there's only one thing that you should do when you're looking for funds. You know why you started this brand, you know why you're scaling it. Now you're taking on someone else's money to do that. There has to be a sense of responsibility in you to know that it's someone else's money. Maybe not even theirs, belongs to a third party that they raise that they're giving to you, right? So understand that there is accountability involved in that for them and for you. And appreciate the fact that this is not a short term journey. Don't treat your investors like this was pocket change given by somebody. Treat them like equal partners as far as possible. You can extract a lot more value than anything else from your investors. but make sure giving away that equity is worth it. So I would say three things: raise money when you don't need it. Many people raise from a point of need. You will get squeezed in that process because there are enough and more founders who did not need it and who VCs want to fund, right? So that's one area. The second thing which is important is get to know the person, because you might be in a spot where you can pick who to work with, and just because somebody gave you a sort of valuation which was 5, 10, 15% higher, don't go with them if you're not sure of them. Go with them if you're sure of them, by all means, but if you're not sure of them, pick the person that you like the most when you can. There will be times when you can't, and people will fund your business along the way. So that's the second thing. And the third thing, which probably is the most important thing, is go prepared when you're talking to somebody, because you think you know everything, which is fine, you probably do, but you may not be able to articulate it well. So, decks, notes, whatever it takes, try and structure your meetings. Don't show up late. Many people do. And try and summarize takeaways from a meeting, because people forget and people get busy. So you want to, at the end of every meeting, whether your other person does it or not, you want to be able to say actionables one, two, three. If I promised you something in 48 hours, you get it in 48 hours. And be honest with whatever you want to say, because you know why you started in the first place. So don't cheat yourself, basically.
Right. Okay. That's learning for me as well. Great. Thank you for the thoughts. So we can good with the session and all the. I hope all the questions has been answered by Pooja and attendees. Like I got a lot of learning, and I'm sure attendees would also gotten that. So thank you. On this note, Pooja, we would be happy to host you in the Elevate sessions as well. So again, Elevate is a cohort and helps in growth and scalability, and also facilitate funds with the help of our investment partners, and DSG is one of them. So great. Thank you, everyone. Thank you, Pooja. Stay tuned for the fourth session. Thanks. Great evening. Happy weekend, guys. Thank you very much.
Thank you so much, guys.
Thank
All
you
the best.
very much.